Hello and welcome to the Monday Futures Market Outlook for October 24th, 2011. This is Patrick Ceresna. For those of you that have not had the opportunity to try out the eminisource.com trading room, 5-day complimentary memberships are available. As always, we start off with a weekly chart of the S&P 500 going back 3 decades. When we plot an 80-week moving average on there, it depicts the bull and bear market cycles that the market has gone through. We bearishly crossed below that about 3 months ago, and already we find ourselves back above that 80-week moving average, begging the question as to whether or not this little short-term bear market pullback is going to be the extent of the selling. And while we certainly cannot rule that out, the S&P still has yet to exceed some key overhead resistance levels. So while we certainly can hold out hope that the market becomes bullish again, it's a little too early to start popping the champagne corks. Just to make some key intermarket observations, we've seen probably the bottom of the stock market for the year, and while commodities continue to look relatively weak and toppy, they're more than likely, even if the commodities do sell, they probably will only be retesting their lows or just temporarily dipping below their lows. More than likely, we have seen all the key short-term lows for 2011, and but what the key thing here is that we don't want to be chasing this market, so we're going to need on pullbacks to be accumulating into weakness. But nonetheless, we've seen tops in the treasury bonds, which have had an inverse relationship to the markets, and while we think that there's room for them to bounce as well, overall, if we see a weak US dollar and weak bonds, that continues to support the idea that we've seen the bottoms for the year in 2011. It doesn't mean that 2012 will necessarily be good, so we're not trying to forecast the next year, but the remainder of the year should look good. When you take a look at that S&P 500 in daily charts, there was a strong end-of-day rally which pushed the S&P 500 to even higher highs. We've now exceeded that 1220 overhead resistance, and now the only real overhead resistance is around that 1250, 1260. Really, as the market approaches that zone, it's going to be a crucial tell as to what will happen in the marketplace, because if 2012 and if we're going into an economic recession and 2012 will be negative, the market should not it should find it very difficult to exceed these levels up on the upside. In the same regard, if the S&P just continues to plug away and exceeds 1260 and just rallies to 1280, 1300 over the next couple months, then that would be an indication that a global economic recession might have been averted, and that would certainly start looking very bullish for the markets. When we take a look at that US dollar, we're about to come up to the critical support lines. This 76 area on the downside is where 76, 76.50 is where all the highs came in May, June, and July, and it's also the zone of where the Fibonacci retracement area is. So if the US dollar is going to turn bullish here, it's going to come off of this zone, and it just so happens that the euro corresponds with the euro rallying up into the 139, 140 area. There is going to be a very important intermarket piece of the puzzle that is going to be determined at these levels on the dollar and as well as on the euro. If the euro continues to strengthen, particularly after that Euro Economic Summit, and then the dollar weakens, that certainly will continue to support the idea that the stock market could do well. When we take a look at copper futures, copper came back down on that flag to retest that $3 area. But the question here, what we're trying to determine, is whether this is going to bang out to be a double bottom, or whether copper is going to do another measured move lower down towards the 280 level on the downside. And this will be some crucial information that we get here as we're going. So at this stage, we're going to be watching this week as to whether or not that we see reversals in those currencies, and whether or not the support lines at $3 hold on copper. In the bigger picture, if we see that weakness in the US dollar and the bottoms come on all these commodities, that will continue to support the idea that the S&P 500 could turn into a much more bullish environment. Next here, I want to take a look at gold futures, and gold turned down from that little flagging formation and has now come for a solid retest of the 1600 level. And I think that whether gold breaks down here or not is exactly going to be correlated with the US dollars. If the US dollar continues to weaken and break down, but particularly below that 76 support line, it will continue. More than likely, gold will bang out its lows here. But if the US dollar reverses and starts a robust rally higher, then gold may weaken as low as 1500 or 1450 on the downside. When we take a look at crude oil has strengthened all the way back up to the overhead resistance level around that 90-92 level. That's going to continue to be a crucial pivot for crude oil. And while there's room for lots of pullbacks here, particularly if we see strong U.S. dollar, it's quite possible that that 75 level double bottom may mark off the low of 2011. It all depends on the degree of the U.S. dollar rally and the concerns about the economic situation in Europe. But if crude oil here can hold supports on any pullbacks, then we may have seen already the lows there. Next year, when we take a look at the 30-year Treasury bonds, we've seen a double top up along the upside and a crucial break on the downside of that double top. While we certainly feel there's room for Treasury bonds to make several thrusts higher if we have any U.S. dollar strength, but any technical breakdown and continued weakness here, particularly below 138, leaves the window open for testing as low as the 134, 135 level on the downside. So while we certainly are not opposed to a couple pops up on the upside of the 30-year Treasury bond here, any weakness here, particularly breaking to a lower low, leaves definitely about a 3-point drop to the downside. That was your Monday Futures Market Outlook. Thank you for joining me.